Hello, welcome to my channel today. This is a King's Tutor. It's the first time of joining us. Kindly like, comment, share, and subscribe to our channel. Okay. Now I want to see a question relating as from the NECOGCE. Okay, one of the economics questions, the section A part. Okay. Now let's solve that. The question said the demand and supply function are given as follows: QD equal 50 minus 5p. QX equal 15p plus 10, where P equals price and QD and QS are quantity and demanded and supplied. They say we should calculate the equilibrium price and the quantity bought and sold. If the price of the commodity is fixed at 3 naira, calculate the excess supply. With aid of the diagram, differentiate between change in demand and change in quantity demand. So now we've done some things relating to this. I tell students most time that most time, why don't send me questions? They revolve around already existing questions. If you're conversant with past questions, it will be very good for you. Okay? So, to ensure you subscribe to my channel, because I treat most of these things all the time. I'll drop in the link below most of the videos we've done that is related to this. Okay, so that you can watch and gain knowledge on that. Okay? So let's start solving. Now, they say we should calculate the equilibrium price and quantity. Now, what is equilibrium? And first, you have to say, equilibrium is a state of rest between two balances. Okay? In terms of demand, it means when quantity demanded and supply are the same, when they are equal, coming from the word equal. So, to do that, now, we'll say at equilibrium. At equilibrium, quantity demanded equals quantity supply. And they want us to find the price and the quantity. But we know at equilibrium, quantity demand is the same as quantity supply. So they gave us the function 50 minus 5p is quantity demand. So quantity demand is 50 minus 5p equals quantity supply is 15p plus 15p plus 10. Okay, from this now we can solve to get what we are looking for, because it's the equilibrium price. Okay, so from this now we want to get the equilibrium price, which is P first. So we want to make it the subject. Now we have minus 5p, and this will have to come to this side. It turns to minus 15p equal 10 is already at the right hand side. Now 50 will move over to mid 10. It turns to minus 50. So minus 5p minus 15p gives us minus 20p equal 10 minus 50 is what? Minus 40. I want to get p. We divide both sides by minus 20. So my p is now 2. So the first question we said equilibrium price. So say the equilibrium price is now 2. And the next one is the quantity. How do we get the quantity? Now, to get the equilibrium quantity, you can substitute the value of P into either the quantity demand or quantity supply, because we said at equilibrium they are both the same. Okay, so whichever one you substitute, you have the same answer. So we're going to substitute equilibrium price, which is 2, into quantity demand. So say substitute P equal to into the quantity demand function, which is 50 minus 5P. You have to get the equilibrium quantity. So we'll have QD equal 50 minus 5P equal 50 minus 5. Our P here is what? 2. So we'll have 50 minus 5 times 2 is what? 10. So 50 minus 10 is what? 40 units. Okay, so the quantity, equilibrium quantity is 40 units. While equilibrium price is what? 2 naira. Okay, so that's the first question. B. If the price of the commodity is fixed at 3 naira, calculate the excess supply. And what is excess supply? Excess supply is when supply exceeds demand. When the number of goods that was offered for sale by the producers is more than the number of goods that was demanded by the consumer. Okay? So mathematically, we say excess supply is equal to quantity supply minus quantity demand as excess supply. Quantity supply minus what? Quantity demand. Now, They are telling us that if the price is fixed at $3, we should calculate the excess supply. So it means that we are going to use the P as $3, 3 naira, to substitute in supply and demand function. Then deduct the demand function value from the quantity supply to get the excess supply. Because we have excess supply, the quantity supply minus quantity demand. So if we do that, we'll have our quantity supply. We said when the price is fixed at 3, so when P is 3 naira, so my quantity supply is equal to 15p plus 10. So I have 15, my P is 3. So 15 times 3 will give me 45 plus 10, which is 55 units. Okay? So, same thing, my quantity demand equal 50 minus 5p. So anyway, I see P, I put 3. I have 50 minus 5, my 3. I have 50 minus 5 times 3 is what? 15. So 50 minus 15 is what? 25. Okay, that's 35 units. So we've got in the quantity supply and demand when the price is fixed at what? 3 naira. So the excess supply now will not be quantity supply minus quantity demand. So you will now ask yourself, what is quantity supply? 55 minus what's quantity demand? 35. 55 minus 35 gives us what? 20 units. So the excess supply is 20 units. Okay? So 20 units exceeded the amount, the quantity of commodity that was what demanded by what consumer. So that's excess supply. So the third one is said with the aid of a diagram, differentiate between change in demand and change in quantity demanded. We have done this over and over again. Now, change in quantity demanded is different from change in demand. Change in quantity demanded can be seen as the movement from one point to another on a demand curve. And the cause of change in quantity demand is caused by only price alone, only price of that commodity itself. So it may either be an increase or what? A decrease. Depending on if the price is increasing, it means the quantity will decrease. And if the price is decreasing, the quantity will increase as regards the law of what? Demand. Okay? That is change in quantity. Demand. It means movement from one point to another on a particular demand curve. Okay? While change in demand is also known as shift in demand. It means when a demand curve moves to an entirely new position, it means that at old price, more or less is being demanded for. Okay? Now, change in demand is caused by other factors affecting demand apart from the price. I get that. For change in quantity demanded, it is what caused by only the price. Why for change in for change in demand is caused by other factors affecting demand apart from the price of the commodity itself. And those other factors can be income of the consumer, advertising, taste and preference, culture, weather, and all that. Okay, so let's represent that in the graphical terms. A change in quantity demand is seen as this. Now we may have so if we have 30 is the price, and we have 20, and we have 35, we have 55. Is a quantity axis. Now, what it means is that when price increase from 20 to 30, the consumer reduce their purchase from 55 to 35. This is exactly what we mean by changing quantity demanded. It moves, it changes because of what? The price. as change in quantity. Okay, but for change in demand, it is shown as this. For change in demand, if we have 30, this change in demand, it means that at a particular price, they either increase their purchased, if it's a positive effect, or they decrease if it's a negative effect. Okay, so as other factors affecting demand, I said earlier on. But for a change in current demand, it is caused by only what? The price. When the price fluctuates, their purchase also fluctuates. But this, when other factors affecting demand, it means at that same price, they may either increase or decrease. So it is not being affected by what? The price itself. Okay, so that is the difference between change in quantity and what? Change in demand. Okay, so that's where we'll stop. That's the last answer. If you're the first time of joining us, please smash that subscribe button, please like this video, ensure you share, like, comment, okay, so that we'll be motivated to do more. Okay, we'll post most of this content there that will help you. Ensure you subscribe to the channel. Thank you very much.